Hello, today I'm going to show you the 5 steps it takes to get a pre-approval letter. Hello, my name's David Lurvey. I've been in the mortgage business over 25 years, and one of the questions I get asked the most is, what are the steps to get a pre-approval? Today, I'm going to walk you through these 5 steps. We're going to go in order 1 to 5 and watch to the end of the video, and I will go through each one of these and you will have a great understanding of what it takes to get pre-approved and what the pre-approval process looks like. Let's just dig right in here and take a look. First, step 1. Make sure your credit score is at least 580, okay? 580 is the cutoff for most lenders out there. Some lenders are 620 and there's very few, but a few will actually go down closer to 500. 580 is a good place to be where there's plenty of lenders out there to help you get pre-approved, okay? Make sure your score is 580. You're like, okay, what scores am I looking at? Well, we're going to look at all 3 credit bureaus, which is Experian, Equifax, and TransUnion. Okay? We look at the 3 scores at each of those. We'll say that your Experian is a 631. Your Equifax is a 680, and then your TransUnion is a 682, all right? The score that we can use to qualify you is the middle score, this one right here. It's not an average of each one of them, it is the middle score. You could have a credit score of 560, 570, and 700, we have to use the 570. Okay, so it's always the middle of the 3. Check apps such as Credit Karma, any of your credit cards that give you your credit scores as well. Experian has a good app to use as far as checking your scores with them. There's plenty of places to go and check your scores, but make sure they're at 580 before you have somebody pull your credit and ding your credit for a pre-approval. Step 2 is do a quick check of your debt ratio, okay? What is a debt ratio? All right, it is your income, okay, and your debts, okay? Debts are installment loans, like student loans, car loans, anything with a monthly payment. Your credit card payments, okay? And again, when we look at your debt, we look at your minimum payment, not, say for instance, if you have a $25 minimum payment on a credit card, but you're paying $100 every month, we don't look at the $100. We only use the $25, okay? And then your new home payment, okay? And that you might just have to estimate. Or you might say, or sometimes it's like, whatever you're comfortable with. If you're comfortable with $1,200 payment a month and you don't want to go over that, then that's something you can talk to your loan originator about, and they'll tell you what you're pre-approved for that would get you a $1,200 payment. But just from your sake, from looking at your ratios, use any payment that you're comfortable with and make sure it works, okay? So, how's the calculation work? Well, we'll say that you have $50 in credit card debt a month, and that's just not your